Hello traders and welcome. I have as usual done my analysis based on the charts, the closes on Friday. And I want to share that with you and talk to you about data that's coming up and what I'm seeing in the markets. And we have weekly charts on the left, daily on the right. Well, I'm starting with the Nikkei. So on Friday we had a very weak close. We had some weak data in the US and the Nikkei finished very badly as well weekly. That is on the daily, that's a sell signal because we pushed into a new high in this little move, this little trend from 16,600 plus, and didn't quite get to 18,000. At the moment we are tucked underneath this resistance, so on this one we look as if we could be coming into this big round number here at 17,000. The weekly, however, is slightly higher. Monthly is marginally higher, so we had a marginally higher start to the year on the Nikkei. Let's now look quickly at the US, and you can see on the left, let's pull this weekly channel up. So we have seen a distribution pattern, seen some selling at the highs, and we are just, and the main sort of mid part of the channel is 17,000. We're only 180 points above that, so it looks likely we'll see 17,000 in the early part of the week, and a retest of the hammer at 16.5 is possible. These hammers do tend to get retested. I mean, that was a nice, relatively nice move up in there. Nice. Big couple of weeks after that, and then eked our way up, and then distribution. So a lot of support underneath us. However, the monthly chart, let's just go over to the monthly chart now. Monthly was not nice. Hangman on December, and this pullback here on January. If we look at last year's period of the same part of the year, we had this was January last year, and then February, so it looked very weak. We came into support, dipped underneath support, and then closed very nicely, and then spent the rest of the year eking our way up. So yeah, like I said, if we come into the lower part of the channel and hold anything between 16.5 and 17, we could then start to make our way up. Basically, the market, yeah, it's cyclically, this is a weak time of the year. Report season is well underway, and it's good in parts, not in others, so mixed. But yeah, we did get very expensive. If you look at the RSI on this, yeah, we have got quite expensive up there, and that was a spinning top, hangman, whatever you want to call it, up there. Alright, so be warned, at the moment we've got non-farm payroll on Friday. Also, the highlights of the week are Aussie rates and UK rates. So let's now switch over to, we're going to start with the pound. I want to focus on the pound extensively this session and my week ahead. And you can see on the weekly chart we got what I would call a stopping bar, an inverted hammer, and we have an actual hammer on the daily chart. Overall, we are still very much in a downtrend. The monthly is showing a significant red bar in the monthly. I can just show you what that monthly bar looks like, because I can go 4 weeks back. The monthly bar has got a little bit of a tail on it, like that. Okay, so this is all filled in. So this is a deep red sell bar in the month of January, but we've just come out of the final day of January, of trading in January. We just about held on. So if the Dow is going to come off, I would expect to see a little bit of weakening, a bit of a bounce on the pound against this strong, very strong dollar. With rates in mind, I think we could see a retest of that 50 MA there at 153.50, which will give us a 300-point move if I'm right. We've got services data Monday morning, so we might even see a little bit of a spurt on that. I'll see how the markets handle that data and then judge whether I want to engage that market. Pound yen, again, quite a big seller's bar on the monthly chart, stopping bar on the weekly, and not quite as good a close as the pound US dollar. So it's the pound US dollar at the moment is looking better. My favourite chart, this has been very liquid, is the pound Aussie dollar. I've had a really nice big move off the lows back in, let me see, which month was that? So September, we were as low as 173, yeah, 173 on this. We're now at 193, so a 2,000 point move since the low of September. And we are showing a little bit of hesitation as we went into the weekend, but a pullback to 192.50, or ideally a little bit deeper into 192, not far off where we are, would get me in to see if that's major support. You can see as soon as I put that line across, there's a very decent support level. If that holds, if we come down there, that holds, I'll buy that and see if that can make it start heading up to 200 plus. I think that is a very bullish chart. And although we have already seen a significant move off, I think there is a good opportunity for us to get in here if you're not already in it. So that's my favourite chart. I also like, if you look at the US dollar CAD, this is why there's no such thing as oversold. You have an indicator which claims to pick up oversold signals, which certainly has, can get very high readings, but there's no such thing. Don't be put off by a market that is already running. Just don't chase it and wait for it to come back to you to try and get a lower entry, and a good stop. So at this point here, so we spent, spent last summer forming a base. This is a cup and handle pattern. There's the cup. Then we form the handle. It's a much shallower move back into support, and then we broke out and pull back, broke out, pull back, push up, etc. So this is what a very good bullish market looks like. And so if we now flick back to the pound Aussie dollar, it's behaving in a very similar way, albeit with this pause towards the end of the week. So there's the hammer. So we get a retest of the hammer, retest of that support. 192 could see us push back up. Alright, that's what I'm interested in. Let's have a quick look at other markets, but that's mainly what I'm interested in. Pound US dollar and pound Aussie dollar. Euro, sideways. The monthly pivot, let's pull the monthly up. We've come right into a fib zone on that Euro US. The RSI indicator is very low, so the potential for, at the moment, for that to push through that level is limited. So if you want to engage that market short, we need a pullback. 11640 is a major resistance area, which will give that a sort of 300 plus point push to the upside. Back into the daily. Let's see if the daily suggests that's possible. The daily is at best sideways. That looks like a bearish consolidation. As you can see what I've marked off here, we get the big drops, we consolidate, we drop, pull back to resistance, drop, pull back to resistance, drop, back to resistance, etc. So resistance on the daily would put that just above 114. 114.60 is a good area of resistance there, and the euro yen that already pulled back into an area resistance of 11134. So pull back now to 133.40. Could see that at least retest 131, but like, yeah, I'm sticking to the better weekly charts. That looks like very similar to the pound yen. We have that stopping bar, and on the monthly we are just narrowly above the 50%. So I think the yen has had its level of repatriation, and I think we could just see that push back up. Like I said, with Aussie rates and pound rates, it's the pound Aussie that I'm most interested in. We didn't end up talking about the, yes, we did talk about Dow, sorry. Right, a quick look at gold and oil. Oil had at long last a bounce. You can see I've got this daily boxed in. On Thursday we just dropped below that box, and that's a good indication in a box setup when you've got a box that's taking time to work its way through. Typically you would see a little dip underneath the box before you shake out all the bears and start to interest the bulls. Any bulls who were trying to hold here, who had their stops just underneath that box, would have got touched as well. What would I do with this now? I do think I think the bounce will continue. I think we could possibly see 53.50. So if you are patient for a pullback deep into that bar, and give it a couple of days, don't just expect it on Monday. If that drops into 45.60 or 45, and even better, 45 would be a retest of the Thursday hammer. That would be, the better the price, the more your profit potential and the lower your risk. So don't chase the market up. Just give that a couple of days and see if that can come back and retest that. And then with non-farm payroll on Friday, that might push that back up to the 50, 53 area. Gold. Sold off on Wednesday, Thursday, only to bounce on Friday. The monthly has come off. Let me see. Yeah, this was a good fib area. Good area of support here at 1180 area. Very, very strong fib support down there, and daily support. And now we pushed up into 1307. Yeah, I think given that monthly is so strong, I think any pullback into 1270 with a stop under 1250 could see that approach 1320, etc. Weekly, however, says that's a hangman. That's interesting. That's why you should, that's why it's a great idea to do your fractal checking, go through all the time frames, because at the moment that weekly is a hangman spinning top sitting underneath 50% fibs. So that suggests that could drag it all the way down to 1250. Between the 50 and the 200 EMA as well, which tends to create a lot more chop and indecisiveness. Okay, but anyway, I am looking hard at the pound pairs and trading that. Alright, let's just look at a couple of stocks as well. I like this one. This is Labrooks. If you look at them, I've got a hammer on the monthly chart, a little bit of a spinning top on the weekly. So that if you're patient, don't chase this market. Again, like the oil, if you're interested in this market, let's update the fibs, because my fibs seem to be a little out of date on this one. So the main area of 114 is the main area of support. So we closed at 11 based on the low of October 2011. We closed above that on Friday with a nice move the back end, second half of the week, Thursday, Friday, pushing up from a low of 112 to 116, nearly 117. We've got a lot of resistance up there. So I would just put this on your watch list. There's a bit, we've gapped up here. I would be, since it has been a very weak stock, I would want to buy into that monthly hammer and not chase this market if I'm going to get. I would want to buy 109. If it carries on running up, that's fine. I'm going to leave it, but I would want to try and see if I can pick a dip on that one at 109 to see if that can then give me a move into the 130 area at least. Oil stocks are very, very interesting. This is Hunting, which has got very hammered. This was, for oil nuts, this was a great one in the past, and lovely setup there for a short when we dropped, came under this support, spent a couple of months work just creeping our way back up into that 720 area, and then dropped to 395. But sit tight. If that, I'm going to sit tight. If that closes above 400, I'm going to at least dip my toe into that one, because I think, and I will look at some US ones. Let's look at some US ones now, in fact, while I've got your attention. That had real relative strength. All the time oil was weak. There's that VLO. I'm very, very keen on stocks in a sector that perform well when the sector is on the whole out of favour. So I would at least take some of that on a pullback to ideally 49 bucks. Not sure we're going to see it, but let's look at some of the drilling ones. This is Parker Drilling, beaten up, but it's coming to a lot of support. Again, when stocks are in a downtrend and you're looking to try and look at a reversal, I would limit my exposure and then add to it if it performs. So I would take a half position in a stock like that and then add to it if it starts to creep up. But that, in the face of it, could start to inch up. That's Parker Drilling, PKD in the US. Diamond Offshore. So massive support at 29.23, massive resistance at 32.78, and it's not a reversal signal, it's a double bottom off of the 30.42 area. I would just give that another day, just see how that closes. But Diamond Offshore looks, it's got the potential to at least go back to the autumn highs of 39.50. But it is still firmly in a downtrend until it closes above 32.80. That's not a confirmed reversal for me. Okay, you get the picture, right? Call up, do a scan in your oil stocks and see what you've got. Alright, in the meantime, I'm going to leave the video there because it's already quite long. And on Traders Roundtable, we will look at spotting reversals. Alright, we'll look at how to handle reversals in more detail. Alright, I do hope you enjoyed that. Happy trading and stay safe.